Good evening, everyone. I'm Larry Kudlow. Welcome back to Kudlow & Company. We aim to be right on America, right on business, and right on the money. Yes, we still believe that free market capitalism is the best path to prosperity. On this evening's program, Goldilocks kicked some more butt today in the stock market, a triple-digit Dow rally. Indexes here and around the world hitting 6- and 7-year all-time highs. Is it the Bush bull market, or is it the Bush-Bernanke bull market? Here to weigh in, CNBC's Bob Pisani, Barry Ritholtz of Ritholtz Research and Analytics, Noah Blackstein, Vice President, Portfolio Manager at Dynamic Mutual Funds and citizen of Canada. Overall, Noah manages $360 million, and his Power Global Growth Fund is rated 4 stars by Morningstar. And Ralph Acampora, Managing Director of Research at Knight Equity Markets. But let us begin with CNBC's Bob Pisani. All right, Bob, what are the big highlights of today's big day?
Well, we have got a global rally going on, and the important thing, Larry, is to keep your eye on the big picture. Today, we saw the market come back after a couple of days where we saw some weakness, but it wasn't very serious, and that's one of the things. Let's take a look at this global rally. There's 3 components of the global rally we've been seeing. First, there's the floor to the market. Larry, every time they try to sell the market off in the last 7 months, it goes down for 2 days, and it comes back. Buyers are there just below the last sale. That's number one. Number two, there's no weak sectors out there. Small and mid-cap and large-cap stocks are all new highs. And number three, the most important thing, this is a global synchronous expansion, perhaps unprecedented in history. The U.S., Europe, Asia, and emerging markets are all rallying. Now, Larry, there's a lot of anxiety down here about all this because no one's ever seen anything like this before. There's 3 bogeymen the bears think are going to bring this thing down. One, the meltdown in the emerging markets. They thought it would happen in Thailand. They thought it would happen in Russia. They've been wrong so far. Number 2, the complete collapse of the derivatives market. Again, a lot of risk out there, and yet it's spread out. They've been wrong about that so far. And finally, of course, the real estate bubble. And Larry, people who keep talking about this real estate bubble don't understand that there's 3 things that bring down real estate markets. 1 is the economy falls apart. 2 is liquidity is withdrawn. And number 3, we got a supply overwhelming the market. None of that has happened. Larry, these bogeymen are out there. Maybe one of them will, but so far the markets have been extremely disciplined.
All right, Robert, that is a wonderful overview, and I want to go to my pal Barry Ritholtz,
Yes,
ace blogger. Now, a lot of Bob Pisani's points, for example, a market floor, no weak sectors, a global rally. Barry, you must be just eating your heart out over these kinds of bullish things. You must be going crazy over this.
Not at all. There's a couple of sectors we like in particular. We've been bullish on Asia for I don't know how long. We like sectors like the agricultural chemical sectors doing. Look at technology. It's been punked for quite a while. Yes, you had a great rally from the July lows last year, but clearly NASDAQ is the lagging sector, the lagging index compared to the rest of the market.
Noah, welcome back, buddy. It's great to see you. Wasn't Barry our perma bull months ago? I'm trying to get this out. You know, straighten me out on this. Was he the perma bull, Noah?
Bear.
Perma bull?
I mean perma bear. Sorry, perma bear.
Indeed he was, but we'll let that go in the spirit of a new year.
No, let's not let it. Let's not let it go. Let's sit. Let's really focus on it for a while. Now,
I think one of the.
Go ahead.
I think one of the interesting things that Barry said is, you know, tech's been acting punk. It obviously had a huge rally off the bottom, and now has sort of digested its gains. But you know, on the technicals of the Nasdaq and technology, I will greatly defer to Ralph Acampora, whose work I respect. But we're finding lots to buy in technology, and I think the Nasdaq's going to be significantly higher by.
Acampora, welcome to the program. We appreciate it very much. So what do you think about tech, just for starters?
Well, I think he's partially right. If you look at the large cap tech stocks like the Microsoft and the Cisco's of the world, I have no problems with them. I think the most recent weakness has been in semiconductor stocks, but I think that's temporary. I love this market for other reasons than what you're hearing on the show tonight. I love old bull markets, and this is an old one. Old chicken make the best soup, and we got new leadership coming out, and no one's talking about it.
Is it fair to say throughout this whole 4-year period that if not perma-bears, you've had people being semi-bears through the entire period? It's very, very extraordinary. A very interesting theme, is it not?
Yes, it is. And in a way, I can understand why they did that, because there were periods of time like 2004, 2005, when the market was kind of flat. But internally, it was moving higher. And that's what I think is driving everybody crazy, Larry. I'm even bullish, and I don't think I'm bullish enough. And everybody I talk to is unhappy. And that's probably the wall of worry that I really
Bob Pisani reported that this is a global phenomenon. You got global indexes breaking 6-7-year highs, just as you have American-based. How do you like the international part of this story?
He's absolutely right. The international has actually led the U.S. markets. But if I were starting out today, I would go for the markets that are least overextended. That brings me back home. And if I look for the groups and sectors and stocks in our markets that have not performed as well in the last 5 years, I get back to the big stocks, Larry, like American Telephone and Microsoft and Honeywell, and they're fabulous names.
Bob Pisani, let me ask you, two leaders today, materials/commodities and transports, both cyclical, both indicative of strong growth at home and overseas. I think both something of a surprise, particularly for those folks that are looking for a big economic slowdown around the world. What can you tell us about commodity stocks and transport stocks? Because I think they're surprising this year.
Commodities and transports have both been rallying, partly on the theory that the soft landing would be successful, and indeed it has been successful. 3% growth in GDP, 3.4%. That's a soft landing by anybody's standard. In fact, that's a little better than a soft landing. So this disaster that the bears have been talking about hasn't happened. Today we had materials up on rumors that Alcoa may be taken over. I think those rumors are probably not necessarily very accurate, but the bottom line is we are seeing a global expansion, and when you are in a global expansion like this, to say let's go out and sell material stocks that control short of foolish. That's why you're seeing disciplined investors hold on to material stock and emerging markets countries.
And of course,